Hi guys, so let's learn one more concept which is weighted average cost of capital. And this is a simple problem where you have to calculate the weighted average cost of capital using the book value weights and also market value weights. Okay, we'll see the given information firstly. These are the sources of capital from where we got the capital into the business. So through business, through debt we got 5 lakhs, which is the book value is nothing but the value in the books of accounts. So 5 lakhs as in the form of debt, 10 lakhs like preference shares, 15 lakh as in the form of equity shares, and 10 lakhs is in the form of retained earnings. These are the book values which are present in your books of accounts. Okay, so coming to retained earnings, as you already know, what do you mean by debt, preference shares, and equity share capital? What do we mean by retained earnings is like, retained earnings is nothing but the profits of the previous year, or whatever the earnings of the previous year are there, that you'll retain in the business itself. Okay, for further business or for further expansion or to meet the business expenses, like that you will retain some earnings. Those are what is retained earnings. Okay, these are not the outside source, it's a retained earning within the business. Okay, so what do we mean by cost of capital is, to get this debt, that means the 5 lakh of debt, what is the cost that we are incurring? Okay, usually for example, on the debts we need to pay interest, right? So you can say simply the rate of interest, or what is the cost, what is the incremental cost, the extra cost that we are incurring to raise this debt, the extra cost to raise the preference shares, the extra cost that we need to incur to get the equity shares. Okay, so let's jump to solving the question. Firstly, to compute the weighted average cost of capital is what they asked in the question. Computation of weighted average cost of capital using book values. Okay, so we'll write the source of capital firstly, the source from where we received the money or capital. We received money through debt, preference, through equity, and the retained earnings. Okay, so what is the book value of these source of capital is like, as given in the question, 5 lakhs of debt. Okay, this is the book value. Okay, now coming to weights. Okay, what do we mean by weights is, how much is debt contributing for the overall capital, for the overall source of capital, what is the total capital value that we have in the business is, let's sum this. Okay, let's sum the book values. 5 lakhs plus 10 lakhs is what preference, 15 lakhs of equity, and then 10 lakhs of retained earnings. So overall it is coming to 40 lakhs. 40 lakhs is the overall capital. So out of this 40 lakhs, how much is the contribution by debt? That is 5 lakhs, right? So we'll do 5 lakhs divided by 40 lakhs. Like that you'll get the weight of that particular source. So it is 0.125. 0.125, we'll round it off to 0.13. Okay, and the next weight being the preference, 10 lakh divided by again 40 lakhs. So 40 lakhs is the total, you'll get 0.25 as the weight. Okay, it is giving 25% contribution. And then 15 lakhs is the equity, the total being 40 lakhs, it's 0.375. I'll just round it off to 0.38. And next again 10 lakhs, as we already did the weight, 0.25 will be the weight of this retained earning also. Okay, next we'll write down the cost. Okay, what is the cost? What is the cost that we have to incur? That means cost is nothing but the incremental cost that you have to incur to get the debt, to get the preference capital, to get the equity capital. Okay, so what is the cost here? It is 8%, right? 8 is in the percentage, but I'm writing it in the decimal because weight also we have it in the decimal, so we'll write cost also in the decimal. So 8% for debt, so I'll do 8 by 100. Okay, 8 by 100 will give you 0.08. Okay, it is 16 by 100, so it will give you 0.16. For retained earnings there is no cost because it's my own earnings which I have in my business, so I don't have any cost for retained earnings. Okay, now what is the total cost? Okay, here you have to multiply cost with the weights. Okay, 0.13 into 0.08 is giving you 0. I'll do it again. 0.13 into 0.08, you'll multiply, you got 0.0104. so just take it to only 3 decimal. Okay, I'll round it off to 2 decimal, so I'm taking 0.018 into 0.16 will give you 0.06. Okay, and then being the cost being 0 for the retained earnings, I'll just write down the weight of retained earnings, which is 0.25. Now I'll sum up all the cost. Okay, the total cost I'll just sum up. It's 0.01 plus 0.03 plus 0.06 plus 0.25. Okay, so overall it is coming to 0.35. so what is the average, like average total cost that I have to incur, that means incremental cost that I have to incur to get 40 lakhs into my business? Okay, this is what weighted average cost of capital by using the book values. Okay, so what is the weighted average cost of capital that we have found? It is 0.35. Okay, you can also write 0.35 as 35% if you want to show it as a percentage wise. Okay, now see, in the question they asked us to find out weighted average cost of capital, using the book value weights and also by using the market value weights. As you have seen, we just learned that we calculated weighted average cost of capital using the book value weights. Same likewise, we need to calculate the weighted average cost of capital using the market value weights. Okay, the difference is like in the book value weights, the values are nothing but what are recorded in your books of accounts. Okay, but whereas coming to market value weights, to raise this debt, okay, what is the value, what is the market value of that source, what is the preference share capital, as per with regard to preference share capital, what is the market value weight? Okay, that we need to consider. Only these values will change to 5 lakh, 5 lakh, 11 lakh, 25 lakh, 10 lakhs, like that. So overall it will become 51 lakhs, for which you need to calculate 5 lakhs by 51 lakh. Okay, 11 lakh by 51 lakh will give you 0.22, 25 lakh by 51 lakh will give you 0.49, 10 lakhs by 51 lakh will give you 0.20. Okay, and then the cost being same. Okay, for debt it is 8%, preference 12, equity 16. As you know, retained earnings will not have any cost, so just take the cost in the decimal form by doing 8 by 100, 12 by 100, 16 by 100. Okay, now multiply the weights with cost, so that you will get the total cost with respect to debt, with respect to preference, equity and retained earnings. Then sum up, you will get a decimal. This is what is the weighted average cost of capital. Okay, in the decimal form. If you want to show it as a percentage, then you have to write it as in the into 100. You do 0.312 into 100 will give you 31%. Okay, just give a conclusion that weighted average cost of capital based on market value weights being 31%. Okay, or 31.2%. Okay, so thank you.